Welcome to Explain the Charts, where we dissect market movements through news and charts. Today's focus is USDCHF, the US dollar versus Swiss franc, and we begin with a look at recent headlines. Major financial news outlets report a significant drop in US retail sales, the largest in 2 years. This has caused a considerable weakening of the US dollar across several currency pairs, including USDCHF. Let's see how this translates on the charts. Examining the daily chart, we see a clear downward trend in USDCHF over the last week, likely correlated with the decline in US retail sales. The price has broken below the 0.9070 support level, suggesting further bearish pressure. We observe significant volume during this decline, confirming the strength of the bearish momentum. Switching to the 1-hour chart, we can see a series of lower highs and lower lows, confirming the bearish trend on a shorter time frame. The 0.8956 level appears to be acting as a temporary support. However, a breach below this would signal a deeper fall. Now, let's zoom in on the last 24 hours of the 1-hour chart. We observe a mild dip this morning, extending the consolidation pattern from the 0.9200 level. Although the price recovered, the overall trend remains bearish. The continued decline in U.S. retail sales and uncertainty in the global markets make this bearish trend highly likely to continue. Analyzing the 15-minute chart, we look for confirmation of the bearish momentum. We see a consistent downward trend with multiple lower highs and lows within the last several hours. This affirms the bearish bias established on the larger time frames. Considering the news and chart data, we can observe a strong correlation between negative economic indicators in the US and the USDCHF price. The overall market sentiment is negative, with analysts predicting a return to lower levels. However, the 0.8956 level on the 1-hour chart acts as crucial support. In summary, significant resistance remains at the 0.9070 level, with crucial support at 0.8956, 1-hour chart. A break below 0.8956 could trigger a sharp drop. The probability of a short-term bearish trend is high, contingent on further negative economic news from the US. For the long term, further news and indicators will be needed to change the bias. However, it is important to note that this is not investment advice.